All right, let's dive into some Malaysian business and finance today. We've got a whole stack of reports here from palm oil predictions to tech giants and even some big company spotlights. Ready to jump in.
Absolutely. Always love digging through these with you. It's so fascinating to see how everything's connected.
So first up, Nestlé Malaysia. It seems like analysts aren't too happy with their recent performance, especially with this whole boycott linked to the Israel-Gaza conflict going on.
Yeah, it's certainly not helping. See, Nestle is already facing some pretty weak consumer sentiment overall,
Yeah,
but this boycott is adding like a whole other layer of complexity to it.
definitely adding fuel to the fire.
Exactly. And when you see HLI slashing their earnings forecast by 28%, and then they slap a sell call on the stock.
Ouch, 28%, that's a big hit. Though what I find interesting is their share price is only down, what, about 11% this year? What do you make of that?
Yeah, that's a good point. It really shows yet the mixed signals we're seeing here. It could be some investors are banking on a turnaround. Or maybe they see the current price as a good entry point despite the risks.
So you think it's a risky gamble then?
Well, it really is a wild card. I mean, BIM Securities research even suggests that the boycott could lead to a permanent shift in consumer behavior. So we'll have to wait and see how it all plays out.
All right, so potentially a risky gamble there. But shifting gears a bit, let's look at Axis REIT. They're selling off a warehouse in Petaling Jaya, and then they're planning to give the RM 9 million profit right back to the unit holders.
Smart move.
Seems like a pretty savvy business move for sure, but for those who might not be super familiar with REITs, could you maybe break down what's going on here?
Of course. So a REIT, or real estate investment trust, basically lets you invest in real estate without having to actually buy any property directly.
So instead of buying a whole building, I can buy into a company that owns a building.
Right. And in this case, Axis REIT is capitalizing on the appreciation of their warehouse, selling it high, and then they distribute those profits right back to their investors.
Makes sense, a total win-win.
Yeah.
Okay, so now there's a company I'm really curious about, K&M Group. They're currently classified as a PN17 company, which basically means they're facing some financial difficulties. And on top of that, their shares are currently suspended pending a big announcement. What do you think this could all mean?
Well, a PN17 classification, that's serious business for any company. It means they're considered financially distressed. And they're actually required to submit a regularization plan to the stock exchange.
So this upcoming announcement could be make or break for them.
It really could be. This announcement could involve a whole restructuring plan,
Yeah,
maybe even a merger, or perhaps some new deal that injects some much-needed capital.
definitely a situation to keep an eye on. All right, so zooming out to the bigger picture for a moment, Prime Minister Anwar Ibrahim is hoping to finalize a massive deal between Petronas and Vietnam's PetroVietnam. And we're talking tens of billions of ringgit here.
Yeah.
This energy partnership could be a real game changer, don't you think?
Absolutely. It has the potential to be massive, not just for Malaysia, but for the whole region. We're talking energy exploration, potentially even a power grid connecting the two countries. And there's even talk of extending the ASEAN energy grid to the southern Philippines.
Wow, so many possibilities. It makes you wonder how this will impact the global energy market, especially with other major players like China making moves as well. They just pumped a whopping US $55 billion into their banking system.
Yeah, China's move there is a clear attempt to stimulate their economy. Probably signals that they're expecting continued global economic uncertainty.
And speaking of uncertainty, remember those trade tariffs imposed by U.S. President Donald Trump, those are still hanging around. And while UBS has predicted 4.5% GDP growth for Malaysia this year, those tariffs could still throw a wrench in things.
Absolutely. They've definitely caused some tension, especially between the U.S. and China.
And then on top of that, you've got this whole situation with Taiwan and its chip industry. China's accusing Taiwan of trying to give away its chip industry to the U.S. for political support. What's your take on all of this?
Well, it's a delicate situation, to say the least. I mean, semiconductors, they're essential for everything. Smartphones, cars, even advanced weaponry. So you can see why it's such a strategically important industry.
Definitely.
And Taiwan is a global leader in chip production. So naturally, China views any move that strengthens Taiwan's ties with the U.S. as a threat. But at the same time, the U.S. is also looking to reduce its reliance on foreign chip manufacturers, especially with all the supply chain disruptions they've had recently.
So it's like a tug of war.
It really is a geopolitical tug of war with huge economic implications.
It just goes to show business doesn't exist in a vacuum. Geopolitics plays a huge role. But let's shift our focus now and zoom in on some specific Malaysian companies. Axiata, Malaysia's largest telecom company. They're back in the black after a pretty rough 2023. And they're even in talks with a potential new shareholder for their Boost e-wallet business. What does this tell you about their strategy?
Seems like they're aiming for growth and diversification. I mean, the telecom industry is incredibly competitive, so it's smart for them to be exploring new avenues like e-wallets.
Yeah, I guess that makes sense.
Plus, bringing in a new shareholder for Boost could give them valuable expertise and resources.
So their CEO's optimistic outlook makes sense.
It does, but it'll be interesting to see how they navigate the challenges ahead.
Challenges like, say, staying ahead of the curve in the tech world. Speaking of staying ahead, Eco World Development Group had a record year, with sales topping RM 4 billion. And their strategy of diversifying their income by investing in data centers and industrial parks seems to be paying off.
Absolutely. They're recognizing that relying solely on property development can be risky, especially with all the uncertainty in the global economy.
For sure.
But data centers and industrial parks, they offer a steadier stream of income, which helps make them more resilient to market fluctuations.
So it's a smart move for long-term stability.
Exactly.
Smart and savvy, just like Tomy, the jewelry retailer. They just hit over RM 1 billion in revenue for the first time ever. It seems like people are turning to gold as a safe haven in these uncertain times. Do you think this trend will continue?
It's certainly possible. I mean, gold has always been seen as a safe haven asset,
Right.
especially during those periods of economic volatility. So if the global uncertainty persists, we could see continued demand for gold, which would obviously benefit companies like Tomei.
So gold could be a glimmer of hope in a potentially stormy economic sea. And speaking of stormy seas, Press Metal Aluminium Holdings, the biggest aluminum smelter in Southeast Asia, they also achieved record profits. But those new U.S. tariffs on aluminum imports could put a damper on things, couldn't they?
Oh, absolutely. This is a prime example of how global trade policies can directly impact a company's bottom line, even if they aren't directly exporting to the U.S.
Interesting.
These tariffs could increase press metals costs and ultimately make them less competitive in the global market. So they'll need to adapt and find ways to mitigate those risks.
And that adaptation is key, isn't it? Speaking of adapting, let's turn our attention to palm oil market. CPO futures are expected to dip after Ramadan as production increases. What does this mean for the average listener?
Well, CPO, or crude palm oil, it's a key ingredient in a whole range of products, from cooking oil to cosmetics to even biofuels.
Wow, I didn't realize.
So yeah, fluctuations in CPO prices can have ripple effects throughout the whole economy.
So a dip in prices after Ramadan isn't necessarily a bad thing.
Not necessarily. It could make those everyday products we use more affordable.
Interesting. So industry expert Dorab Mistry predicts prices between RM 3,600 and RM 4,100 per ton later this year. But here's a curveball. Global biodiesel production is expected to shrink in 2025 due to rising feedstock costs. Could this shift the demand for palm oil?
It's definitely something to consider. Biodiesel production relies heavily on vegetable oils, like palm oil. So if production shrinks, it could ease some of that demand pressure on the palm oil market.
Makes sense.
But at the same time, Indonesia's rising biodiesel mandate, that's expected to increase their domestic consumption of palm oil, which could offset some of those effects.
So many factors all influencing the price.
Exactly.
This is where it gets really fascinating for me, seeing how interconnected all these seemingly separate trends really are.
It's what makes analyzing the business world so engaging. You have to look at both the micro and the macro, the local and the global, to really understand the forces at play.
All right, well, let's keep exploring those forces. Coming up, we'll be diving into the financial reports of some other major Malaysian companies. Stick with us.
Definitely some interesting stuff ahead. Welcome back. All right, so let's delve a little deeper into some specific financial reports from Malaysian companies. There are some interesting trends emerging here. I'm sure you'll find these pretty insightful.
I'm all ears.
Let's kick things off with Chin Hin Group Property. They've just announced their first bonus share issue in almost 2 decades. And get this, they haven't declared any dividends for years.
Wow, that's a big move. Can you explain what a bonus share issue is and why it matters for investors?
Sure thing. So a bonus share issue basically means the company's giving out free shares to existing shareholders. It doesn't actually change the underlying value of your investment, but it does increase the number of shares that you own.
Okay, so more shares, but the same overall value.
Exactly. And it can often be seen as a sign of confidence in the company's future growth. And it can definitely boost investor sentiment.
So they're saying, hey, we believe in our future and we want you to share in the potential rewards.
Exactly. In Chin Hin's case, this is their first such move since 2007, back when they were still known as Boon Kun Group.
Fascinating. Okay, so now what about Genting Plantations? They had a really strong quarter, didn't they?
They did. Their profits are up 77% year on year, largely thanks to higher palm product prices.
So they're riding that palm oil wave.
They are, and they're sharing that success with their investors, too. They just declared a 17-cent dividend.
Not bad at all. It seems like their strategy of diversifying beyond just palm oil is paying off.
It really does. Their property and ag tech segments are also showing some nice revenue growth, which helps make them more resilient overall.
Resilience is key. Speaking of diversification, Guangchong, the cocoa grinder. They also declare a special dividend after their net profits skyrocketed more than 14 times.
It's incredible.
What's driving this success?
Well, higher selling prices for cocoa products, driven by those supply constraints, have played a big role.
So they were in the right place at the right time?
You could say that. It seems they were able to capitalize on that favorable market environment. And the best part is they expect demand for chocolate to remain strong.
Good news for chocolate lovers everywhere. All right, so Hapsang Plantations also saw a significant jump in their net profit, 4 times higher in the fourth quarter. And like Genting Plantations, they're also increasing their dividend payout. What's the story there?
Well, once again, those higher CPO prices are a major factor. But they're also benefiting from Indonesia's B40 biodiesel mandate, which is driving up the demand for palm oil.
So Indonesia's policies are having a direct impact on Malaysian companies.
They are, and with Indonesia's new export levy on palm oil, Malaysian palm oil is becoming more competitive in the global market.
A lot of moving pieces. Okay, so now let's shift gears and look at the banking sector. A strong banking sector is usually a good sign for a healthy economy, right?
It is, and the news from the banking sector is generally positive. Hong Leong Bank posted a solid 5.5% increase in net profit, driven by higher net interest income and strong performance in their Islamic banking division.
For those of us who aren't financial experts, could you explain what net interest income is?
Of course, it's basically the difference between the interest a bank earns on the loans it gives out and the interest it pays on the deposits it holds.
Got it. So higher net interest income means more lending and better returns.
Exactly.
So Hong Leong Bank is doing well. What about their parent company, Hong Leong Financial Group?
They also declared a dividend after seeing a modest profit increase. Their insurance arm, HLA Holdings, performed particularly well. Their diversified business model seems to be working in their favor.
That makes sense.
However, their investment banking arm, Hong Leong Capital, saw a slight dip in profits, likely due to some delays in deals.
The market can be so unpredictable. So Maybank, the biggest bank in Malaysia, they reported a 6% profit increase last quarter. What are they focusing on for future growth?
Well, they're aiming for even higher returns this year by focusing on key growth areas like wealth management and bank assurance.
Interesting.
And they're really honing in on their core markets of Malaysia, Singapore, and Indonesia.
Makes sense to play to your strengths.
Okay.
What about Public Bank? What's their outlook?
They're also seeing profit growth. And they're really emphasizing Malaysia's strong economic fundamentals, particularly highlighting the resilience of the banking system.
That's good to hear. Now, zooming out to the regional level, Singapore's OCBC Bank is predicting slower loan growth in 2025. What does that tell us about the economic outlook for the region?
Would suggest there might be some headwinds on the horizon. The CEO of OCBC has even expressed some concerns about the increasingly complex geopolitical landscape and that volatile macroeconomic environment.
Doesn't sound too good.
However, despite their cautious outlook on loan growth, they've announced a pretty generous US $1.9 billion capital return to investors.
Wow, that's quite a statement. So they're trying to strike a balance between caution and rewarding their shareholders.
It seems that way, but they're also expecting their net interest margin to weaken slightly, which could signal some concerns about their future profitability.
The global economic landscape is full of uncertainty at the moment, isn't it?
It really is.
And decisions made in one part of the world can have ripple effects across the globe. For example, Thailand's central bank just cut its key interest rate by a 0.25 percentage point.
Exactly. They're concerned about that slower economic growth and the potential impact of global trade policies, particularly those coming from the U.S.
So they're trying to stimulate their economy?
Exactly. This move by Thailand could actually put pressure on other central banks in the region to follow suit.
Wow, it really highlights how interconnected everything is. But amidst all this uncertainty, it's inspiring to see how some companies are innovating and adapting. Let's move on to Sunway, a company that seems to be thriving despite all the challenges.
Sunway is a fantastic example of a company that's leveraging diversification and strategic planning to achieve some really impressive results. Let's dive into their story next.
Okay, so Sunway. They just announced some pretty amazing annual revenue for FY 2024, over RM7.8 billion, plus a nice 4-cent second interim dividend for their investors. Seems like they're really on a roll.
Yeah, they're firing on all cylinders. It really shows the power of their diverse business model. Almost all their segments saw some serious growth, especially construction, property development, and their trading and manufacturing.
Their construction segment seems to be absolutely booming, especially with all the demand for data centers these days. They secured over RM 4 billion in new contracts last year, and their target for this year is even higher. What do you think is driving all this success?
Well, they're riding the wave of digital transformation, that's for sure. The demand for data storage and processing is only going to increase. And Sunway's in a great position to capitalize on that.
Makes sense.
And it's not just construction. Their healthcare segment is also growing like crazy. New hospitals opening up left and right, and more planned for the future.
That new Sunway Medical Center in Ipoh is a big deal. It's great to see them investing in healthcare infrastructure. And their property development projects in both Malaysia and Singapore. It shows they're definitely thinking long term, especially with that new Johor Singapore Special Economic Zone on the horizon.
Absolutely. They're strategically positioning themselves for future growth. Their partnership with MRT Corp to develop a transit-oriented mixed-use development near the Bukit Chagar RTS station. That's a prime example.
So they're creating these integrated ecosystems,
Mm-hmm.
connecting transportation housing businesses.
Exactly. Very smart.
So what does all of this mean for you, the listener? We've covered a lot of ground today, from market moves and company spotlights to global economic trends. What are the key takeaways you should be thinking about?
I think the biggest takeaway is that the business world never stands still. It's always evolving. We're seeing companies like Nestlé having to adapt to changing consumer trends, while others like Axis REITs are seizing strategic opportunities. And all those success stories we talked about, like Axiata's return to profit, Eco World's diversification, and Sunway's record-breaking performance, they all show how important it is to be adaptable, innovative, and to really understand what's shaping the market.
Couldn't agree more. And while there are definitely challenges ahead, like those U.S. trade tariffs and all the geopolitical uncertainty, there are also tons of exciting opportunities out there for those willing to go after them. Remember that massive energy deal between Petronas and Vietnam? That could be a total game changer for the region.
Exactly. And always remember, diversification is key. Companies with multiple streams of income are much better equipped to handle those economic storms.
And as always, stay informed. The more you know about what's happening in the business world, the better decisions you can make. Whether you're an investor, an entrepreneur, or just someone who wants to be in the know.
Could have said it better myself. Keep your finger on the pulse and never stop learning.
Great advice. Well, that wraps up our deep dive for today. We hope you found it insightful and engaging. Until next time, keep exploring, keep questioning, and keep diving deep.
Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.